we've got George Stahl as well, who's going to tell us all about Yahoo shuffling the deck.
Yes.
Again, all the deck chairs. I'm not sure what it is. It is Titanic week, so tell us about Yahoo.
So Scott Thompson is outlining his plans to us and mainly to the Yahoo employees to get them on board with it, and breaking Yahoo up into three parts basically: consumer, regions, and technology. And through all three parts, the focus that he wants to bring to them is to increase the commerce, increase the return on investment that Yahoo gets with all its relationships with advertisers and with its partners.
Peter?
My reading of the memo was that he was playing up commerce, which is a place that Yahoo really hasn't played much in before, and that relates to his experience at PayPal. At least that's the logical connection. I mean, Yahoo up to date has traditionally been an ad-driven company. They grab a lot of eyeballs and they sell advertising against it. He would like some more transactional stuff going on.
Right.
As well.
And in fact, this is an extract. That was just an extract from the note that said we must put our customers first. There it is. For Yahoo to win our core business, every one of us must put our customers first. Which is very easy to say, but how's he going to make them do that?
Exactly. I mean, I think one of the things that's missing is a lot of details from this, and maybe that will come out in the talks that he has with its employees today, which are starting as we speak right now. But you know, it's a different mindset for Yahoo, as you were saying, because the assumption was all these people come to the website, they will eventually figure out how to make money from all these eyeballs. They haven't yet. It doesn't look like they ever can, so now they're shifting gears a little bit more.
Oh, I disagree.
They
make a lot of money selling against those
eyeballs. Not
as
much money as investors at Wall Street would like them to make.
Yeah, I think the problem is their users are slowly going away, and they haven't innovated, and they're seeing their competition come up from Google and Facebook. That's the real problem. They make a tremendous amount of money selling advertising against those eyeballs. They would like more, and I think also in the memo he said, look, this is still our core business, is our media properties and advertising. That's still going to be most of what we do.
Right.
The commerce is a little bit of a twist.
Now, the third point, which is a large shareholder, one of the Yahoo's largest, said that they weren't very happy that the fact that we got the strategic plan, which is this reorganization, after an announcement of 2,000 jobs being cut, or 14% of the workforce. Why does it matter so much to this particular investor? Third point.
Well, you like to see things start with an idea, okay, here's the direction we're going in. So to get there, we need to do this. What seems to have happened with Thompson is he got into some of the specifics of implementing the direction without outlining what that direction was going to be. And I think that's been confusing to Wall Street and to investors by just saying, okay, we could get where we want with 2,000 fewer people without actually saying where the company is going was a little bit of a surprise.
So let's have a look at the stock when we can get that. But Peter, is that matter? Is it all in the delivery of this? He should have said, hey, this is what I'm going to do, and then did it, rather than doing it and then say this is why.
I think if you're a Yahoo employee, it might have been a bummer to have 2,000 people laid off last week without being told what you're going to do, and only now just finding out. But I don't think Dan Loeb really cares about that. I think he wants the stock to move fundamentally. That's what his investor.
Well, it did move. It moved down.
Right. So I don't think he's tremendously interested in the optics. His point is, look, I have a plan to fix Yahoo. It's not the plan these guys are doing. It doesn't really matter what their plan is. It should be my plan, or let's move the stock, one or the other.
So these three distinct areas, which are consumer, regions, and technology, does that pave the way for a breakup into those three different areas, into three separate companies? And as you know, sometimes this can be purely administrative, and sometimes it can pave the way for other things.
I think that's an interesting question. Are these moves designed to resurrect Yahoo and get the business going, or is it designed to pretty the company up for a possible takeover for parts of his business? The thing is, for Yahoo, the most valuable part of its business are its Asian assets. The holdings that it has in Asia.
That we know it wants to sell.
Well, maybe. Obviously for the right price. But that right now remains to be the most valuable part. The question is, can Thompson get the other parts, the more domestic, the parts that people are more familiar with, as valuable?
Yeah, and we shall see. And obviously, we wish them good luck. It's obviously everyone looking at this very closely.